Global markets continue to trade in a fragile, headline driven environment as Middle East tensions remain the dominant macro theme. Investors are oscillating between relief rallies and defensive positioning as developments around the US Iran conflict shift between diplomacy and escalation, keeping volatility elevated across asset classes. In FX, the dollar remains broadly supported by higher US yields and safe haven demand. Treasury markets continue to price a more inflationary backdrop tied to elevated energy prices, with the US 10-year yield holding near 4.6%. Euro dollar remains under modest pressure, while dollar yen pushed back to 159, keeping intervention risks firmly in focus as markets eye the 160 threshold. Commodity-linked currencies have softened, with the Australian dollar pulling back following cautious but hawkish RBA messaging. Meanwhile, the PBOC continues to resist yuan weakness through a firmer daily fixing, signaling Beijing's desire to maintain FX stability amid rising global uncertainty. Equity markets remain torn between resilient growth expectations and concerns over higher oil prices and tighter financial conditions. In commodities, oil remains the clearest barometer of geopolitical risk, with Brent holding near $110 and WTI up above $100 despite hopes for renewed diplomacy. Gold has eased modestly from recent highs but continues to find support from geopolitical hedging and inflation concerns. Overall, the backdrop remains cautious, with higher oil prices, elevated yields, and geopolitical uncertainty continuing to drive a defensive positioning across global markets. That's all for now.